Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is June 7th, 2019, and this is a quick week review. I'm reviewing this week because at the beginning of the week, I text a couple people and say, hey, look at what's going on in the market and all. I think the market is getting ready to turn around. I think the market has hit a bottom, and of course, I'm a very aggressive trader. So I look for a trade and look for something to get into, and I did, but as you also know, those who know me, I don't carry anything over the weekend. So, but this particular trade, I may go ahead and carry it over the weekend. I am going to go carry it over the weekend. This one trade, and I just wanted to go ahead and show you this one that I did this week, and I'm try to explain to you why, not why, but what I was looking at and what I expected based on what I was looking at. So again, first of all, trading is risky. You can and you will lose money at trading. So please check with your financial advisor, please check with your significant other, and make sure trading is something that is suitable for you. Let's go ahead and take a quick look at, let's go over to the charts right quick so you can see what I'm talking about. And you're going to be looking at the QQQ chart, which I'm going to get off of. As soon as we get over here, I see my screen has switched. That's not important, right? Well, let's take a look at this. First of all, QQQ is the thing that I trade, and this is what I saw on QQQ. I saw this candle pattern right here, and you've seen me talk about this candle pattern right here before, right there. This is what we call our right side candle, these two candles right here, and plus you had another candle pattern here. Go to the pattern site and look up your candle patterns and study your candle patterns and all. So that's what I saw. And this was the third. That was the third is when I actually placed my trade. So this was the day based, as you can see also, what I also had, I had already drawn my support lines, demand lines, whatever you want to call them, down here on the chart. So I came into one of my demand areas and it started pushing back out. So I was willing, based on seeing what I see here on QQQ, to take a trade. I was willing, based on what I see here on QQQ, on this day, to take a trade. Now, let me show you exactly what I traded. Let me bring that up. And you can see what the market has done. I'm not talking about that. And the other thing, then the next day, I got my confirmation, the way I look at the market, that we may be going up. Anything and everything can happen in the market, we know. But this was the normal candle pattern that we look for, a right side candle, that I look for, a right side, we call it a right side candle here at Right Side Trading. But let me look at, show you one of the things that I traded. And let me slide it over. Yes, let me slide it over. I don't want to. It was this right here. On that day, on the 3rd, I traded CVX, that's Chevron. As you can see, I sold some calls. I sold the call, bought some stock, also bought a call. And that was on the day it was dropping into this area. My reason why I did that, it's a dividend paying stock. It's an aristocrat stock. It's been paying good dividends. And if the market was going to continue down and not bounce at this point, I didn't mind holding this particular stock. And I had sold the cover call on it, which protected me down to, I think it was like $113 or something like that was I looked at as my break-even point on that particular stock. So I was willing to take the little profit that I got and get out of that if needed to get out of that stock. So also, let's take a quick look at SPX. I don't need to change that. My SPX is right here. Let's go here. On SPX, this was the 3rd. This is what you got. You got what we call a right side gap, a vulture. It's almost kind of like a vulture gap. It wasn't quite a gap because I think this low right here might have been, but let's see, look at the high of this candle. The high of this candle was 27.6307. The low of this candle was 27.62. So it went a little bit lower than that high. So, but it was like a right side gap. the next day. So me being in my trade and the other things that I was doing, it's kind of like, oh my God, this is one of those oh my God type trades, that you should be in all week. And I didn't. I tell you the truth, I really didn't play it as well as I should have played it. But I'm showing you the one trade that I did do okay with. And let's look at it. And I don't want to do it there. Let's look at CVX. I'm kind of jumping around, but I wanted to show you the two index and what I was seeing. This area here is a much bigger area, but again, double bottom. And when I say double bottom, let me draw that out for you again. Oh, I got it here. It's here. It's kind of like when we got a bottom here. That's this area here. It's the same area. And I had a line here. My SPX stuff is not as defined as I have on the Qs, because I trade XPX, but I trade XPX a little bit different than I trade the Qs. That's all I need to say about that. But they both was bottoming out and in a good place to reverse back up. So now let's look at the CVX thing. Let's unlink all this stuff. Let's do CVX and see how it did. I got in on the 3rd, this day right here. That's the other thing. This is what I was seeing on this stock. The market was going down and this was going up. That's why I didn't mind buying this stock at the time. Also sold the call at this level here, as you saw in my email, at 120. Wasn't expecting, I didn't know if it was going to go that high or not. I was looking at my break even was actually below this level here. It was like 113 something. That's where my break even, okay, if you go down in the next few days, get out of this thing, and take a small loss or a small gain, whatever the case may be. And I had sold the call way up here. I had brought another call way up here, not expecting it to be throwaway money. But that call was only, I'll tell you, that call was only $57. Now, let's go take a quick look at the options and see what actually happened on this trade here. As we can see, the stock that I got on this day here, even if I got it, say, at 116, the close of the day, or 116, it is up over $5 a share. So on the stock alone, minimum, it's up over $5 a share. And the call that I actually sold is right now is at a point where that stock is going to be called away. That's just where I usually do it, because I don't want to pay the money to keep the stock anyway. That's why I purchased it. That's why I purchased the call, to kind of like, okay, if it does go crazy and go up and break these tops, I'll still make some money. Now let's go look at the trade itself, the options, and we don't want to do there. We want to go here. We want to go here, CVX. And this is why I'm in a paper account showing you all this. And this is why you need to open up your paper account. You know who I'm talking to and all. And you need to practice and get where you look at this stuff. I did a July. I did it way out here. And I did a 120 call. See, I don't want to buy that call back now for no $4 and something. I just let that stock go. I made over $4 on the stock itself. I'm not greedy. That's one of my, maybe a problem, but I'd rather just let the stock go. I made the money go. But now this option, I made over $1 on that. So the money that I might think I might be losing on the stock because I didn't sell it high enough, but didn't go whatever, I made the money on the call that I purchased. And as you can see, somebody else is thinking that, I don't know if they're selling or buying or whatever. But we can, I can't show you that. I can show you, I might be able to show you that, what that call was going for. I'm going to show you something else right quick. Send to grid on. Let's see if I can do this. Nope, I can't do that. I don't want to do it that way. Let's send to, nope, I don't want to do it there. Send to chart. Let me see if I can do this. There we go. Now, Why I'm doing this, that's the wrong strike that I did. Let's try it again. I want to do this strike here. The strike that I purchased is the one I want to take a look at. Let's delete. That way I won't be send more information. Toss chart. And we want to put it here. Now, this is the 125 that I actually purchased. As you can see, it's $1.69, and I'm telling you that that thing is up over $1 from where I purchased it at. And I want to maximize this chart where you can see I purchased it on the 3rd, this day right here, and as you can see, the maximum price that day for that particular option was at 55 cents, and now it's at $1.60. So that means I more than doubled my money on that option at all. So I'm okay with that trade too. That's all I really want to show. I showed you a couple other little tricks things that I do, how I look at option prices and how options prices flow, and things that you can look at. As you can see, you got a chart here on an option strike on this particular platform. That's another reason for you out there to go ahead and open up your account so I can show you all these little things and all these little tricks and things that you can look at and help you understand options a little bit better. Because if you see how they flow and how the prices go with these things based on the underlying stock, it'll help you make better decisions on when you do start trading options. So get going. You know who I'm talking to. Open that account. You don't have to find it, just open it so we can start looking at stuff. Other than that, that's all I want to talk about. Again, have a great week. I hope you had a great week trading, and I hope you have a great weekend. Talk to you later. Bye.